Welcome to today's Explainer. We're jumping right into a really fascinating alternative to the traditional real estate playbook. We're looking at the investor's crossroads, Moti City, and the education rental market. Instead of your standard residential leasing, we're zooming in on a highly specific, very lucrative niche, and we'll be using Modinagar's Moti City as our primary case study.
So think about this for a second. What if your rental property just never sat empty? If you've ever played the landlord game, you know that vacancy is the ultimate nightmare. It's honestly right up there with a midnight plumbing disaster. Every single month that property sits empty, it is literally eating into your annual returns. You're still paying the mortgage, the taxes, the maintenance, but absolutely zero cash is coming in. But what if you could tap into a demographic that refreshes itself every single year, like clockwork? That's the whole premise of education-linked real estate. We're not talking about trying to time the unpredictable macro market here. We're talking about hitching your investment directly to the totally predictable academic calendar.
Now, where does all this endless demand actually come from? Well, our source material literally calls Modinagar a gold mine, and for good reason. You've got these prestigious institutions, SRM University's NCR campus, Divine College, the Moti institutions, all clustered right there together. Every year, this massive wave of outstation students rolls into the city. We're talking thousands of them, and their absolute first priority, usually before they even look at a syllabus, is finding a place to crash. The sheer scale of this local academic ecosystem is just staggering. But here is the real secret for us as investors. There is a glaring shortage of modern, quality living spaces to actually house them all.
You might be thinking, well, college kids will sleep anywhere, right? But the landscape has completely shifted. It's not just the students making the call anymore, it's the parents who are actually footing the bill. And let me tell you, modern parents demand way more than those older, unorganized paying guest setups. Security is huge. They want 24/7 monitoring for peace of mind. Then you have the amenities. High-speed internet and power backup? Those aren't luxuries anymore. They are absolute survival tools for students today. And finally, proximity. Being just minutes from campus is the ultimate deal breaker. The older colonies around there are totally striking out on these evolving demands, and that creates a massive, lucrative gap for a savvy investor to step into.
Let's talk about what this means for your bottom line. Compare your traditional single-family lease to a student group rental model. The traditional route is fine, but it's heavily dependent on general market shift, job markets, the broader economy. It's stable enough, sure, but your income ceiling is strictly capped by what one single household can comfortably afford. Now flip that to student group rentals. You rent a larger flat to a group of students. Because you're essentially catering to multiple individuals who are pooling their cash to split the rent, the total monthly income you collect almost always beats the yield of a single-family lease. It's just a completely different math equation, and it works heavily in your favor.
This whole dynamic creates a really resilient, three-pronged advantage. First up, low vacancy rates. Like we said, with that constant influx of students, your property is rarely collecting dust. Second, continuous academic cycles. Unlike typical residential investments that can swing wildly with corporate hiring seasons or sudden economic dips, education-linked properties give you this unique stability. Universities don't just suddenly stop enrolling freshmen because the stock market had a bad week. And third, year-on-year growth. As these universities expand their programs, the demand for student accommodation in Modinagar just keeps climbing. This specific demographic acts as a really solid buffer, shielding your investment from general market chaos.
Okay, so we've nailed down the why. The demand is incredibly high, the yields are better, and the market is rock solid. But here is the critical crossroads for you, especially if you're stepping into this arena for the first time. How do you actually pull the trigger? Do you buy a ready-to-move flat, or do you grab an empty plot of land? This is the major decision point we need to tackle next. Moticity gives you a couple of different ways to enter this market, and picking the right one depends entirely on your personal strategy, your risk tolerance, and how fast you want to move. You've basically got two financial entry points here, and they appeal to two completely different investor profiles. Option 1 is the ready-to-move flats, starting at 46 lakhs. We'll call this the turnkey investor profile. Option 2 is the GDA-approved plots. That's approved by the Ghaziabad Development Authority, by the way, starting at 57 lakhs. We'll call this the custom builder profile. These are two completely distinct paths. One person wants a plug-and-play asset that cash flows from day one, and the other wants a blank canvas to maximize highly specialized yields down the road.
Now, if you are a first-time property investor, the core advice from our sources is crystal clear. Start earning rental income immediately. The turnkey approach, grabbing one of those ready-to-move flats, is heavily favored for beginners. And honestly, it makes perfect sense. There's zero construction risk, no dealing with flaky contractors, no frustrating delays, no waiting period. The literal second you close that deal, you can hand the keys over to the next wave of incoming students. It is without a doubt the fastest, most frictionless way to deploy your capital and actually watch it bounce right back into your bank account every single month.
The gateway number to remember is 46 lakhs. That specific entry point secures a 1 or 2 BHK home in Moti City, and that is the absolute sweet spot configuration because of the affordability and the crazy high demand among your primary tenant base, the students, the teachers, the university staff. By targeting this exact price point, you are instantly capitalizing on the student housing shortage without over-leveraging yourself right out of the gate. It's an incredibly accessible, highly optimal path to get your foot in the door of this high-yield market and get that cash flowing.
But hey, maybe you've got a bit more capital, a longer time horizon, and a very specific vision. That's where the custom builder strategy comes in. Step 1. You secure that GDA-approved residential plot starting at 57 lakhs. Step 2. You don't just build a regular house. You build a specialized student hostel, or even a premium co-living villa. And Step 3. You tailor the whole thing. Maybe you design it specifically for international students or PhD candidates who really crave those quieter, high-end spaces. Obviously, this takes a lot more effort and patience, but the payoff is that you get to custom build for niche, premium renters who are totally willing to pay top dollar for specialized living.
So, to boil this crucial decision down, it really comes down to fast cash flow versus custom yields. Ready flats give you immediate occupancy. You completely skip the construction headache and start collecting rent right away. Plots, on the flip side, let you build exactly what the highest paying demographic in the area is begging for. If you're a beginner, ready flats are almost always the safest, fastest recommendation to get your engine running. But if you're an experienced operator and you want to build a localized rental empire, that plot option offers some incredible scalability.
Now, why are we focusing specifically on Moti City and not just some random building near a campus? It all comes down to what our sources call the study life edge. Remember those changing modern demands we just talked about? Moti City absolutely dominates the local market because it offers a lifestyle that local, unorganized PGs can't even touch. A swimming pool and a mini theater right on the premises for students to de-stress, that is a massive, massive draw. But look at the infrastructure, too. You've got Namobar RTS connectivity, meaning rapid transit right to Delhi or Meerut for weekend trips. That makes it incredibly attractive to out-of-state students. Plus, the 4-lane approved road access means university buses can route right past the front gates. It's a no-brainer for a student.
And while you're busy collecting that fantastic monthly yield, what is actually happening to the underlying asset? Look at the timeline here. Today, you're enjoying that monthly cash flow, and it's super easy to get in because major banks like HDFC are offering financing. But look toward the future. Modinagar is a major focus of the Master Plan Ghaziabad 2031. That means the land or the flat you buy today isn't just a cash-flowing asset, it's sitting smack in the middle of a rapidly appreciating urban corridor. So your immediate rental yields are safely backed by some very serious long-term capital appreciation, driven by massive planned city growth.
Which brings us to our final big question. Are you ready to invest before the next semester begins? Because the hard reality of the education rental market is that the academic calendar simply does not wait. Every few months, a brand new semester kicks off, and a new wave of tenants is desperately searching for the exact properties we just broke down. Whether you go with a turnkey flat for that immediate cash flow or the plot to build your custom vision, the gap in the market is wide open right now. So the question isn't really if you should invest in student housing, but rather will you secure your spot before the next bell rings? Thanks so much for joining me for this explainer. I hope this gave you a really clear, structured roadmap for your next big investment move.